Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. I'm with Ireland Como Lafoy. Let's get into what happened in markets today. All right, we saw $3.10 of gains in the canola today. 649.10 is where that closed. Minneapolis wheat up 1.5 cents at 586. Some really weird stuff happening in Minneapolis wheat, which we're going to talk about here in a second. Kansas wheat up a cent and a half at 521 and a quarter. Chicago wheat up 7 cents at 521. We're also going to show you some good charting or some interesting charting patterns on the Chicago wheat today. Soybeans up 2 and a quarter at 1034. Corn up 3/4 of a cent at 403 and a half. Bean oil was down today at 36 points down at 51.82 a pound. The Canadian dollar was relatively unchanged at 72.11 at the time. I took the snapshot. Live cattle up 350 to 231.30. That makes another new high today. Same with feeder cattle up 568 to 352.25. And I noticed there that the symbol reference on my cattle seems to have gone wrong. But let's go and take a look at the charts here. We're going to talk about spring wheat first because there is a little bit of a weird phenomenon here. As you can see, we actually came up and tested the 20-day moving average right near 598 today. I thought that was weird, and so I took a little bit of a closer look into it. Here is the 5-minute chart. I could have gone down to the 1-minute chart to show this same thing, but it looked a little bit messier. I like the look of this better. Right at the open today, we saw a bunch of trades that pushed it up to 598. There were 75,000 bushels traded there, 2,000 metric ton approximately. This is really hard to explain, and I'll just kind of pull up the time and sales here. Here's what had happened at 8:30:06 this morning. We saw 15 trades booked at 598. We saw a couple as we were leading up to that 596 and a half earlier, 596, 595, 594. So it did kind of creep up there, but all of a sudden jumped 2.5 cents to 598, triggered 15 contracts there to get traded. And then it kind of trailed off again, right from 598, right down to 589. So almost, a little over 8 cents of difference there, right between the 15 contract trade and the next trade at 589.75. Let's take a look at earlier in the day as well. We did get some weird stuff happening later on in the day. This was here, hang on. I'm going to go back here for a second. This volume was the largest of the day, but didn't push it to the highs of the day. As you can see here, this is that candlestick that rocketed up to 598 and then traded back down towards 590, 589. Here, there was a large volume amount done in this little period of time, but not new highs. So let's take a closer look at that. This was earlier in the day. We saw 50 contracts traded in this little grouping here, 250,000 bushels or 6,800 bushels. The next one we saw was a little bit bigger at about 11:44 or almost 11:45 this morning. 49 contracts traded, 240,000 bushels or 6,600 metric ton. So interesting trade today in this particular contract. And I should mention this wasn't solely or this wasn't broad among all of the Minneapolis wheat futures. This was just in the December contract. None of the others showed this kind of volatility today. And volume wasn't significantly lower than it has been in the last couple of days. I mean, it has been lower since moving to the MIAX as a general rule, but today's volume wasn't that much different than any other recent days, I should say, in the December pit. So I just find that interesting. I can't necessarily explain it because I don't know who bought this at 598 or almost $6 a bushel. Then they came back in and bought 590. As you can see, this chunk of 590 a couple of times. So somebody's buying wheat here, or Minneapolis wheat, specifically in the Dees. I can't explain that at this time. If I hear something, I'll make sure to update you on future videos. That wasn't the only wheat pit that showed some weird trade, or not necessarily weird, but some interesting trade today. This is December Chicago wheat. And as you can see here, we actually saw an engulfing candle pattern here today where the low and the high engulfed the previous day's candle and made a new low here. That is what we would consider a bullish engulfing pattern It is sometimes used as a signal as to potential reversal in the market. This is a little snippet I took from investopedia.com. It this pattern appears in the downtrend, and as you can see, would be a negative candle and this would be a positive candle, and the bullish engulfing means that the open of the day and the close of the day completely engulfs the candle, or not including the stems or the candlesticks. Candle wicks, I guess, would be the right term. I don't know. Anyway, so that's a bullish engulfing pattern. That also, interestingly, as I look at the volume, we did see some volume this morning right at the open at 8:30 as well. That pushed it up into that 5 kind of 27 range, but then it continued to climb. So unlike Minneapolis wheat, we saw some follow through on that trade. It did kind of fade off through the middle of the day, but then rose again to close closer to its highs, or in a gain position on this contract. The other thing I thought I would mention is this pattern is also present in the September contract. As you move out a little bit further, the March, the May, etc., it does diminish a little bit. You don't get that same engulfing pattern as you do in the Sept and the Dees, but the Dees right now still has the most open interest and the most volume in it. So I thought I would talk about that first. But the same kind of pattern can be seen here in the September contract as well. So I find that interesting. The other interesting thing is that all the wheat markets seem to be behaving relatively differently today. We did see another new low in HRW wheat today, and no engulfing pattern or anything like that present in this market. So this market continues to look like it's just grinding lower, where the other ones had some interesting trade today, particularly with that. Those weird block of trades in the Minneapolis. All right, let's move a little into the oilseed side. Canola did post a new, I shouldn't say post a new low. It opened lower than yesterday's close and closed lower than yesterday's high. So not necessarily a bullish day today in the canola pit. It did close again below the 200-day moving average, and we talked about that yesterday as being a bit of a warning sign. These are, again, normal seasonal times for the canola market to be weak, but we are trading below the close now of the Chinese tariff announcement day. Also a little bit concerning. We did see that cross happen today with the 20-day moving average moving below the 100-day moving average. Anytime you get a shorter term moving average crossing a longer term, it does spell a little bit of risk as well. So we have a number of kind of warning signs here that the canola market isn't necessarily finished going down just yet. What's interesting today is that we did see some gains in canola, but losses in the December soybean oil. So yesterday, I gave credit to the losses in canola to soybean oil, but today we continued to see losses in soybean oil, but did not see and we saw gains in the canola pit. So a little bit of a divergence today. Let's leave today on a high note. We have October cattle prices moving to new highs today. I've said again, it's going to be very difficult to call the high in this market. We did finish the day off at 230, almost 235 in the live pit. That's October contract. The September feeders as well closed at 358.10. These are just insane prices. It seems to keep pushing higher even after consolidation ranges go. I would say we did see. I do subscribe to a gentleman in the U.S. His name is Joe Vaklavic. At least I think that's how you pronounce his last name. Great content out of him, and I would actually highly recommend that you subscribe to both of us. We give the Canadian perspective. He gives an excellent U.S. perspective. He brought a guest on today named Brian Split that he talked about a broad number of charts, but one of the ones he talked about was the cattle, particularly the feeder, or not particularly the feeder, but in the feeder side, his technical analysis, which he's a significantly better technician than I am. I would say he was talking about the cattle market being able to make it to 360 or possibly even 368 in the current pattern situation. So I would encourage you to check out his stuff. I will leave a link to his YouTube channel in my description as well for you to check that out. This video isn't available for free on his YouTube channel. You do have to subscribe to get it. So again, I would urge you to do that. Speaking of subscriptions, I also urge you to subscribe to our premium content. We send out morning commentaries every day. We send out this video every day or every day that it's produced, and we send out some reports through the week as well, including a weekly report at the end or near the end of every week. So make sure to subscribe. Go to canadianagmarkets.com/subscribe to subscribe, and we'll get you set up and receiving our reports. All right. Thank you for joining us today. We will see you again tomorrow. Have a great day.